So in this live stream, we're going to be talking about the Euro US dollar analysis. And right here, you can see that we were anticipating to see a retracement on the euro, but so far the euro has been edging higher and higher again after mitigating the highs that got broken right here. So the next thing we're going to do is to just be patient and watch to see what the market is eventually going to show us. And so far, we mitigated this extreme key level right here, and after that mitigation, we saw this retracement. So we were expecting to see some level of deep retracement, but as you can see, price didn't really have much downward momentum to retrace. So after that, we've just been having this continuous move to the upside. So the next thing we're going to look at is the reaction on the dollar so far, what the dollar is doing. And on the dollar, we were anticipating to see some level of retracement to the upside. And so far, you can see that price has consistently been going to the downside, edging lower towards this low right here. So we're just going to have to be patient on this one because there isn't really much to do but to wait to see what price is eventually going to do. And so far, you can see we have this low on the high, and we'll be watching to see whether price is going to take the sell side liquidity or we're going to reverse and take the buy side liquidity. The next thing we're going to do now is we're going to be looking at the British pound US dollar as well. I outlined this key level on the British pound US dollar as my extreme levels, and I'm watching this key level to see what the price is going to come into this key level. One thing to take note of is we have this low resistance liquidities resting right here, and we'll also have our extreme key level resting right here as well on GBP US dollar. So basically, we're just going to have to wait this one out to see if price is going to tap into this position. And if we eventually tap into that position, then we'll be watching it closely to see whether there's going to be a significant shift in market structure on the 15 minutes time frame. If we do see a 15-minute shift in market structure, then we'll be looking for a potential sales on GBP US dollar. But if we don't see this, then it means we're just gonna have to be on the sidelines. If price comes into this key level and smashes through it, it means we're just gonna have to be on the sidelines because it means here will potentially be used as a support zone, and then potentially price continue to go to the upside. So this is my analysis, what I'm looking forward to see on GBP US dollar. If you have any questions, feel free to drop it in the chat. So the next thing we're going to do now is we're going to look at gold to see what gold is doing as well. So basically, I wouldn't be surprised to see an all-time high on gold because right here we had this consequent encroachment, and I was anticipating to see whether the midpoint of this week's is going to act as some level of resistance to send us into this discount key level before we continue higher to create an all-time high. But gold doesn't really have any downward momentum, so it just wants to blow past the overall high. So basically, the only thing we're going to do is just either look for a continuation to blow past this high or just be on the sidelines. Basically, nothing really much to look at on gold besides an upward move to smash through the all-time high. So let's take a look at NZD US dollar as well. So for NZD US dollar, I'm still looking at this low resistance liquidity resting right here. And we also have this inefficiency resting right here as well, which can also act as a catalyst to drag price to the upside. So we'll be watching this key level. And if we do see price coming to this key level and then show us a 30 minutes break of structure, then we will look for sales on NZD US dollar. So I'm going to put an alert right there. So when price comes into the key level, I'm going to be watching it closely. If we do see a 30-minute shift in market structure from this position, then we'll potentially have to look for sells to sell this to the downside. But if price comes in there and it doesn't show us a shift in market structure, then we'll basically just have to be on the sidelines on that one. So that is my analysis on NZD US dollar as well. If you do have any questions, feel free to drop it in the chat. So for AUD US dollar, so let's look at the 4-hour time frame. AUD US dollar, quite a very tricky pair. I'm still anticipating to see a run on sell side liquidity because the key level that I was watching right here, this inefficiency, that was the key level I wanted to buy from, but price came very close, few pips to tap it, probably about 1 or 2 pips to tap that key level. And then we saw this rejection and run on buy side liquidities. You can see the low resistance liquidities resting right here. You can see how price smashed through them and mitigated this inefficiency right here. So after that mitigation, the next thing I would like to see would be either a potential retracement into an extreme and continue higher, or a run on sell side, and then we look for a potential reversal from this key level to continue higher. So that's my analysis on AUD US dollar. So the next one we're going to be looking at is we're going to look at the indices to see what the indices are doing as well. So for the indices, if we go to the daily time frame, we can see we created a low, and then this is our overall high right here. And right here, we have this last move to the downside before an expansion that broke structure. We'll go to the 4-hour time frame, and right here you can see this downward push before an expansion. Price came back down, took liquidity from this previous low. You can see the previous low right there, took liquidity, mitigated this inefficiency, ran liquidity from the low as well. So all we would like to see would be a 3-minute shift to market structure. If we go to the 3 minutes time frame, we can see on the 3 minutes time frame, we can see a high, a low, a break. So we're anticipating to see a retest on this key level. But from experience, I've noticed sometimes when price leaves this kind of positions, it tends not to mitigate the extreme. So what we're going to do in this case, we're going to mark out this position right here, and we're going to be waiting for price to mitigate this position. And when price comes in there, we'll be looking for a 5-minute shift in market structure. So once we see price come into this position, we want to look for a 5-minute shift in market structure. If we do see a 5-minute shift in market structure, then we look for buys from this key level. But if price does not show us any 5-minute shift in market structure right here, then it means we'll have to wait for price to come into this position and then buy to continue higher. Because overall, we're still bullish on Nasdaq, and we're still expecting higher prices on Nasdaq. We still wanted to continue going to the upside. So that is my analysis on the indices and Nas. So we're gonna look at Bitcoin as well, see what Bitcoin is doing. So far, you can see this key level. I outlined this key level, this inefficiency, and I said if we do smash through this inefficiency, I would expect price to come back and use it as support and continue higher. And look what happened. Price smashed through it, used it as support, rallied, took liquidity from the all-time high, came back to use it as support again, run sell-side liquidity, and then look what we're seeing now. Another expansion to potentially rally above the all-time high. So that is how you can basically understand how an inefficiency, a fair value gap, can be used as an inverted fair value gap. When it doesn't work for a sell, you can use it for a buy. So right here, if we were anticipating to see a sell on Bitcoin, this would have been a key level for us to look for sells on. But as you can see, price came, invalidated the key level, rallied, and then came back to use this same key level for a buy. So how to get into this trade would have been the moment we tap into that position, you look for a smaller time frame shift to market structure. We'll have a high, a low, a break of structure, inefficiency, entry position right there. So right there will be your entry, stop loss, the low, take profits. You can look for low hanging fruit inefficiency, 1:2 risk to reward ratio. And so far, you can see price is basically very close to the take profit position. So this is one way to use inverted fair value gap in trading. It helps a lot. So in a case where you're trying to use a fair value gap and it doesn't work for a buy or sell, you can then use it as an inverted fair value gap to trade with the trend, because the trend on Bitcoin remains bullish. So we just focus on a continuation to the upside on Bitcoin. So that is my analysis on Bitcoin. We will look at some Binance Coin as well, see what it's doing. So basically for Binance Coin, this high right here is a low resistance liquidity because no liquidity was taken from the previous high. So I believe it's a very soft zone. The price can easily smash through that key level. You can see I've already outlined the analysis right there. So this right here is going to be our, this is going to be literally the last point of resistance for Binance Coin. And the moment Binance Coin is able to smash through this position, all-time high will be my next draw on liquidity. That'll be the next key level I'll anticipate for it to draw to and smash through it. So that is all I'm anticipating to see on Binance Coin as well. So if you do have any questions based off my analysis, feel free to drop it in the chat. I'll be there to answer you. I appreciate you all for tuning in, and I'll talk to you all in the next live stream.